Let's welcome on board Sandip Sabharwal as well to talk to us about what the market's fundamental tell him. Sandeep, hi. Let's begin by the IT sector. That's the obvious first question. Given the fact Accenture's book-to-bill has fallen to 1 time versus 1.4 last quarter, and it's also pointing to a decline of anywhere between 1 to 4% in Q4 as per their guidance, does that worry you, or do you believe it is in the price?
So I would say that it's partly in the price, but it's not fully in the price because analysts still are not accepting the fact that there is a significant cutback on discretionary spending. And if the US Fed actually goes through with its, uh, as per what the Fed chairman has said, of one or two more hikes going forward, then it could create more economic uncertainty in the near term, and that typically hits discretionary spending even more as companies become less confident of near-term growth. Longer-term growth prospects obviously remain fine. So I would still think there could be some more downside, but the downsides might not be very significant for the large cap companies, but for many of the mid-tier companies, which even in the downturn of the sector have moved to 52-week highs or all-time highs, I think the risk is greater there.
So, Sandeep, would you begin buying IT stocks, if at all, back home?
I'm not buying right now, but I think if people who cannot, we as professional investors try to be a bit over smart and try to time it too perfectly. Sometimes we might go wrong also. But from a retail investor perspective, I think they could start buying slowly, not put everything. Whoever wants to buy into IT companies, buy slowly and spread it out over the next 3 to 4 months.
HCC, that's going to be one stock in focus. And, we've been talking about block deals and as to how the action in the market, in an otherwise quiet market, is really in the block deal space. And it seems that Asia Opportunity Fund yesterday sold about 3% stake in HCC. And Accenture Securities has bought about 79 lakh shares. A couple of block deals happened on HCC yesterday, which closed in at the session highs. About a 14.5% kind of uptick is what HCC saw. Sandeep, you've been tracking this entire construction space, right? NCC, NBCC, even HCC for that matter. Any investment ideas here?
So in the construction infra space, companies continue to do well. Many of the companies have got record order books, and the interest rate cycle also seems to have peaked out, so that benefits these companies. So NCC continues to do very well. So I think even at these prices, it has value. Other stocks we hold in the space are companies like Ahluwalia Contracts and VA Tech Webag, both of which I think have re-rating potential still, despite doing very well. HCC is something where people have been waiting for a turnaround. There are signs of turnaround, but then a full-fledged turnaround has not happened for a long time because their debt resolution got delayed so much. Now that has happened. Now how that plays out, we'll need to see. So it's a high-risk bet for people who are willing to take a higher risk.
Just looking at the market construct yesterday, while all sectors actually bled, there was realty, telecom and cement, and along with financials, of course, which were some of the key drags. But the one space, Sandeep, off late, which has been, or rather has begun to do well, is the entire insurance space. What do you make of this recovery from those Feb lows, and whether there is investment worth here?
Insurance companies have moved up as a contra play because they underperformed so much, and then some data out of the insurance companies' growth for April, May was taken positively. But these are slow growth companies which will grow at a maybe single digit, low double digit. And many of these stocks from the lows have rallied by 30-40%. So from current levels, I don't see any significant value in the near term.
So that's about the insurance company. The other space which was seeing a bit of a pressure yesterday was cement. So India Cements was one stock which is down about 5-6%. And this morning there's a note coming in from JP Morgan. saying that they're cautious on the sector. They find the risk reward to be unattractive on a 3 to 6 month basis, and they believe that the raw material prices have bottomed out. So means whatever was the benefit that was supposed to come from raw material prices easing has already happened, and from here on, if at all, there'll be an upward trajectory to raw material prices. So that's the take coming in. Sandeep, what's your take on cement and the entire building materials pack?
So overall, cement, I think, is a neutral kind of story. So I don't agree with the logic which was being given out just now that raw material prices have bottomed and that's why you shouldn't buy cement, because I think the flow through of the falling prices will still be felt over the next 2-3 quarters as the older inventories get exhausted. The issue with the cement industry is the huge increase in supplies, because of which the companies are unable to go through with the price hikes, and whenever they have tried, they have had to roll price hikes. So that remains the concern. And over the next couple of years, as the investment cycle of cement companies is so aggressive, we'll see demand, the supply outstrip demand, although the demand growth is quite strong. That's why it's a neutral kind of sector at this stage. So at lower levels, we would like to buy, but at current levels, I wouldn't like to buy.
There's an interesting note from JP Morgan on Bajaj Auto saying that, it continues to be one of their preferred picks within auto, saying that they're likely bottoming of the two-wheeler and three-wheeler exports. They're seeing the recovery come by in the two-wheeler segment, and there's EV volume ramp up and improving margins because of a better mix, and that's going to really aid the growth for Bajaj Auto, according to them. Also, that the launch of Bajaj Triumph is an important catalyst, and that's going to open up a new addressable segment altogether. And especially when we spoke with the Bajaj Auto management as well the other day, earlier this week, that is, they were talking about as to how Triumph is something that they are looking at going aggressive, at least in the export market, and hoping to garner some good numbers there. Sandeep, the whole construct of the entire two-wheeler space is changing, right? Any fresh calls that you may have within autos?
So two-wheelers is more a segment where people are trying to forecast a recovery domestically. Now we have to see whether that plays out. Overall, companies have done decently, especially Bajaj Auto has done very well, and they did a buyback also at the right time, and subsequently the stocks done very well. But I think the key is that these stocks have moved up a lot. While volume growth in the four-wheeler side is very clear, the demand momentum continues there. Two-wheelers is still uh, a bit uncertain, so we need to watch out. And the stocks have also run up. I would say that we need to watch out for the volume growth over the next few months before we can conclusively say that the stock should move much higher from current levels, because most of these stocks have already rallied 30-40%.
Okay, so Sandeep, on that note, we'll let you go. That's the take coming in as far as Bajaj Auto is concerned.